Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Stocks trading cautiously after post-election Trump trades push Wall Street higher. The dollar hits a one-year high, and Bitcoin briefly tops $89,000. US President-elect Donald Trump moves quickly to install loyalists into prominent posts in his administration as Republicans edge closer to a House majority. And we're live at the COP29 Climate Summit in Baku. Coming up this hour, Exxon Mobil CEO Darren Woods joins me on set. Well, it has just gone 8 a.m. across the Emirates. I'm Joanna Bersetchi at the COP29 conference in Baku, Azerbaijan. This is our second day here. So much is going on around the world with all of these markets. But let's just kick off the show with a quick market check of how Wall Street fared yesterday. What we did see was a continuation of the stock market rally, but perhaps with slightly less of a ferocious intensity that we had towards the end of the week last week. You can see the S&P futures now are dipping slightly towards the red, down about 0.8%. This after making another record high yesterday, breaking through 6,000 by the end of the day. A broad-based rally is what we're seeing. Also, a lot of focus on what has been happening with the dollar. Big jump in the USD yesterday. All of these are sort of Trump-related trades. So people have been betting on the stock market, also betting on the USD. This morning, we have the dollar trading slightly firmer as well, up about 0.1%, building on gains from yesterday, where we jumped 0.6%. We are now at the highest level for the USD in over a year. Bitcoin also in focus. You can see we're just sitting shy of 90,000 now, so at all-time highs. And just notable, actually, that Bitcoin has actually jumped 32% since the U.S. election. All of that has happened in the last couple of days. So a lot of focus in the crypto community on what Trump coming back to the White House means for regulation in that space. And then oil, take a look at the energy complex. We are sitting at around 71.71, so nice symmetric figure, but below $72 here. A lot of downward pressure came through on the energy complex yesterday on disappointment on some of the China fiscal measures. So again, we continue to talk about the demand drivers for the energy complex here. But switching on, let's also check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. And Avril, just give us a sense for how some of these overnight markets are faring today.
Yeah, we're seeing it mixed in Asia as investors assess what a Trump presidency is going to mean for Asia, specifically China, which is, after data in the past days really showing how the economy is struggling. You look at credit data and how it disappointed. But we are seeing a bit of a sentiment booster in the form of this Bloomberg scoop, which talks about how China is coming through with a fiscal push, thinking of cutting home buying taxes. The CSI 300 is a bit higher today, but the Hang Seng is bearing, again, for the second day, the brunt of the selling in the region. Jumana.
Avril, thank you so much. Well, it is day 2 of the COP29 climate conference here in Baku, Azerbaijan, where the focus is gaining agreement on a new global goal for climate finance. So let's get straight into it. Joining me right now is Darren Woods, the Exxon Mobil chairman and CEO. So much to talk about. Last year I thought it was interesting that they did a global stock take at COP28, and it showed that the world is really far away from where we need to be versus some of the targets that were set in 2015. You fast forward a year later, many people are saying that this could be the hottest year ever. And the question I have for you is, do you see yourself as the CEO of an oil and energy company as part of the solution here?
Absolutely. I think one of the things that we're saw this last year, and we see it again this year, is the challenge that the world has of significantly reducing emissions while continuing to meet the growing need for affordable energy is a tough one to solve, and we need more solutions, not less. Our company is uniquely positioned to offer some of those solutions, and I think more and more policymakers are interested in hearing what they can do to help companies like ourselves and our industry contribute to the solution set.
Do you feel welcome here?
I feel people want to have an understanding of what we're doing and where we can actually help. So yeah, there's a lot more interest today than there was maybe 2 or 3 years ago.
One of the major announcements that came out of COP28 was countries committed to working together to reduce methane emissions by 30% by 2030. And I know on the back of that, you've also set some of your own targets. Can you just give us an update on your methane emissions targets and the progress you've made?
Sure. Now, we set our target several years ago. Since 2016, we've actually been reducing our intensity of our methane emissions. We're down about 60%. Versus 2016, and what the coming out of COP29 was trying to bring together a broader set of industry players to commit themselves to that improvement, and we've committed to kind of help continue our drive to reduce methane intensity and emissions, but then help others in their drive to do that. And I think it's a very positive development that came out of COP29.
Do you think the rest of the industry is on the right track?
I think they're all moving in that direction, and I think particularly, certainly in the U.S. and in Europe, people are very committed to that, my peers in the industry, and I think more and more broadly, people are joining that drive. It's the responsible thing to do. The world needs to reduce emissions. There's a role for our industry to play, and we've got to start with our own house.
Well, let me just turn to the big news of the last few weeks, which is the return of President Trump to the White House. He has obviously run on a mantra of drill, baby, drill. And I just wonder, from your perspective, is that actually going to lead to more U.S. production of oil?
I mean, from our perspective, we don't set our business plans based on the political agendas or who's in the White House or what party's in control. We look at the fundamentals and making sure that the investments that we're making are advantaged versus the rest of industry, will be resilient in the bottom of the cycle, and then we make these plans and commit to that. And so I think we don't kind of turn those on and off depending on who's in office.
But your shale production has been growing quite strongly in the last quarter. Can that momentum continue?
Yeah, that's our plans are continue to do that. We expect to, by 2027, be at 2 million barrels per day.
You've invested in some businesses that benefit from the Inflation Reduction Act. Do you have any concerns there that President Trump may look to repeal some of those policies?
So we've been very focused on figuring out how we can bring our capabilities and skills to reduce emissions, recognizing that today there aren't very many market forces in place that will incentivize investments to reduce emissions. And so the IRA was I think a legislation that was focused on carbon intensity, the right way to drive emissions reductions. And so we responded to that to demonstrate there are ways to continue to provide affordable energy and reduce emissions. We have, I think, very competitive projects there, and it's going to be a question of how quickly do we want to advance those. Obviously, we need the regulations to come out of the administration. Even the Biden administration today hasn't fully translated the IRA into effective regulation. So that has to be done even before the Biden administration leaves office. We don't have Class 6 permitting done, which allows us to store the CO2. And so this administration has things to do to advance that. And then we'll worry about the next one when the Trump administration's in.
Start in January. Let me ask you a macro question. I kicked off the show talking about the downward drivers for oil. How do you see the outlook from here? It feels like, barring any of the geopolitical risk, it's been really difficult for us to see a sustained rally in the oil complex here.
Yeah, you know, it's interesting. Demand is at record highs, both for oil and for gasoline and diesel. And so the demand is out there today. The industry's been very effective at supplying that demand. I think that's what you're seeing. And fortunately for us, with some of the turmoil in the Middle East, that available supply has kept the market's fairly stable. And so it's less of a demand issue, and there's just a lot of supply.
And how much of a headwind do you think these China demand signals are posing? Yesterday, one of the catalysts for the market dropping was the fact that fiscal stimulus disappointed what investors wanted to see.
I mean, our industry, we're always stuck between where the supply is at and where the demand is. That tends to vary. We don't get too focused on what's kind of happening outside the window in today's market. We're very focused on the long term and making sure the investments that we make are resilient to that long term and that we're very efficient. We've cut out over $11 billion of cost since 2019 to make sure that we are cost efficient and our projects are advantaged versus the rest of industry. We feel pretty comfortable, irrespective of the price environment. We've got good investments and we generate good returns.
I just want to round up the discussion with actually one of the big themes at ADIPEC last week, the energy conference in Abu Dhabi. And there was a lot of talk about sort of the long-term drivers of energy demand, AI and the usage of data centers, one of them. When you look out ahead and you extrapolate, and of course I'm conscious that we're sitting at a climate conference here, but do you think that fossil fuels will continue to be part of the energy mix even in 2050?
Absolutely. I think AI is certainly the most recent demand driver that people are talking about. But don't forget, we've got billions of people living well below the energy poverty line that we've got to lift up. And there's a direct correlation between people's prosperity, their living conditions, and their use of energy and having affordable, available energy. So that is going to drive energy demand going forward. The challenge here, though, is not fossil fuels. The challenge is emissions. And I think one of the things that policymakers have gotten confused is we can continue to use oil and gas. We have to deal with with the emissions associated with the combustion of oil and gas. That's a different problem statement, and we have ways of doing that, of dealing with the emissions while we continue to use oil and gas productively. It goes into a lot more than just fuels for automobiles.
It's not oil and gas, it's combustion of oil and gas.
That's exactly right.
I'm going to leave it there. Thank you so much for joining us in our show. We appreciate it. That was Darren Woods, the Exxon Mobil CEO. Thank you very much. While Republicans are on the brink of clinching unified control over the White House and Congress under Donald Trump, the president-elect, meanwhile, is narrowing the field of candidates for major appointments, such as Secretary of State and Treasury Secretary, which could be announced as soon as this week. So let's bring in Bloomberg senior editor Bill Ferries in Singapore. Bill, so tell us about some of the picks that we've heard about so far, and what do they tell us about Trump's priorities for when he actually takes office in January?
Well, I think broadly what the picks so far tell us is that the president-elect is going to move very quickly. He's not dawdling on some of these key posts, such as National Security Advisor and Secretary of State. He plans on taking office January 20th with kind of an immediate agenda. I think they also tell us that he's going with people who he thinks are going to be very loyal to him. And that is actually a little bit of a shift from 2016, 2017, when then President-elect Trump went with a lot of establishment candidates like Rex Tillerson, the former CEO of Exxon, and some other top picks that maybe he didn't know that well beforehand. Now he's going with people he knows well. He's also appointing people to White House counselor advisory roles. Those positions don't need Senate confirmation, so they will take office January 20th.
And Bill, just on the foreign policy front, clearly an important feature in the Trump presidency, especially in this part of the world. We're now seeing some key names tapped for National Security Advisor, for Secretary of State. Just walk us through some of the options on the table.
Yeah, what we've heard so far is Mike Waltz, a congressman from Florida, former Army Green Beret who served in Afghanistan multiple times. He is going to be Trump's pick for National Security Advisor. So basically your in-house White House foreign policy expert. A little bit of a symbolic pick there, too, because the U.S. withdrawal from Afghanistan was seen as something that really damaged President Biden's support with the American public. Donald Trump going with someone who is a veteran of that conflict, but also someone who has really called for the U.S. to pivot away from Europe and the Middle East to really focus its forces in Asia on China. And then for Secretary of State, the most likely pick now appears to be Florida Senator Marco Rubio. Rubio, best known in foreign policy circles for his positions on Venezuela, Cuba, Latin America in general, but he is also a China policy hawk. He sees China as the major threat to the U.S. in the decades ahead. So I think the overall picture is a strong and tough focus on U.S.-China relations in the coming administration.
Yeah, and of course, with the potential selection of Lighthizer as well, then that could lead to renewed discussions about tariffs too. Bloomberg senior editor Bill Ferries in Singapore, thank you so much for giving us an update on where we stand with the transition team. Well, still ahead, climate negotiators secure a breakthrough on day one of the COP29 summit in the hopes of unlocking billions in finance for emissions mitigation projects. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Baku today. While climate negotiators have secured a breakthrough on day one of the COP29 climate summit here in Baku, leaders agreed on rules for a UN-administered global carbon market, potentially unlocking billions in finance for emissions mitigation projects in developing countries. So to discuss some of the other developments here at the COP conference, let's bring in Munich Security Conference CEO and Vice Chair Benedikt Franke. So good to have you with us. I guess top of mind for me is the question about how you see the intersection between climate and security concerns.
So I think a lot of people are now waking up that both are very closely intertwined. We at the Munich Security Conference have been saying for many, many years that we need to go beyond what we think is a rather simplistic view of climate security. You know, the causality of the weather is getting more extreme, that will cause instability, that will make people move, that migration will cause further instability, which will cause conflict. I think that is what most people think climate security is. We look at it in a more geopolitical sense. So what does this do to the balance of power? Are there any windows of opportunities to look at conflicts in a different light? And so a lot more geopolitical than what is currently.
What would you say would be a good outcome out of this COP29 specifically? What are you looking for in terms of outcomes?
I think the developed world, following up on its many promises to the global south, because we are having enormous issues with ensuring that the global south sticks to the rules-based international order.
Yeah. So when I look at the needs for climate financing, the numbers are huge, right? And you look at some of the estimates, they're north of $1 trillion annually. And those are the conservative estimates of how much financing is needed. And that's just to go from rich countries to developing countries. There's a need for investment. There's a need for building out energy grids. And I look at the state of the world's public finances today, some of the pressure, especially some of these European countries that they're coming under right now. You've got the likes of France under the microscope from the credit rating agency's perspective. And I wonder, where is the financing going to come from? Do you not think that climate financing is moving down the list of priorities now? Because many of these countries are focused, one, on domestic policies that would benefit their economies, and number two, on defense, given there's a war raging on the continent.
I think you're absolutely right. And this means we need to leverage the private sector much more than we've done so far.
Yeah. And so what role do you see for the private sector then in helping to deal with some of these climate/security? Is there an appetite?
I think some of the geopolitical events of the last 3 years have opened what I've previously called a window of opportunity.
Yeah.
We see pressure on European nations to de-risk from China, meaning they need to find alternative markets, they need to look at alternative supply chains, and combining that with our imperative for reaching out to the global south may cause more private finance to be directed towards Africa and Latin and South America.
How should Europe be thinking about the return of President Trump to the White House?
I think a lot of the fears that we're currently seeing are unfounded when it comes to foreign and security policy. A lot of what President Trump has been calling for and continues to call for are things that we should do anyway. We shouldn't invest in defense just because President Trump wants us to. We shouldn't work on resilience just because he wants us to. We need to do this for ourselves. So I think he may be yet another wake-up call that we Europeans have needed for quite some time.
He's been pushing for a peace deal between Ukraine and Russia. Do you anticipate that outcome is likely in a way that it's also just and fair for Ukraine? Do you see that actually happening?
I think most observers doubt that within 24 hours you can reach a deal that is just and fair and especially sustainable, that will last for years and even decades. So I think that President Trump's rather disruptive approach to foreign security policy may actually open some doors that have been closed so far, but I'm not seeing a quick deal, no.
What do you think it means, though, in terms of local governments building up their defense budget? Because we spoke about some of the budgetary pressures. We also spoke about some people actually agreeing with President Trump that not enough spending has been allocated towards defense, especially when you think about those NATO budgets. So what do you think the direction of travel is right now?
I think for Germany and most other European countries, the direction of travel is very clear. We'll spend upwards of 2% of GDP, potentially closer to 3% of GDP in the years to come. And that will mean less money for other things.
How do you see the domestic situation back home now in Germany? A lot of turmoil, and one of the reasons that the Chancellor is not here, I mean, there are many reasons he's not here, but obviously he's dealing with a lot back home. How do you think the political landscape could shift post these snap elections that are going to be held?
So I think what is clear is that the Conservative Party, CDU, CSU, will come back to power, and that means stronger focus on defense. We remain a steadfast, or will remain a steadfast supporter of Ukraine. We will work closely with President Trump, and we will push for a strong role of Germany in Europe. That will come at the expense of some of the social spending that Chancellor Scholz has been advocating.
Interesting. And does that come at the expense of green spending, given we're here at a climate conference?
To be honest, I think yes, it will.
Well, unfortunately, that's not a great place to leave it, but that's all we have time for. Thank you so much for joining us here at COP. That was Munich Security Conference CEO and Vice Chair Benedikt Franke here with me in Baku. Well, also coming up, a 3-term Prime Minister of Mauritius is set to reclaim the top job a decade after being voted out. More on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Baku. Well, now for a look at some of the other stories we're following this morning. A 3-term Prime Minister of Mauritius is set to reclaim the top job a decade after being voted out. Navinchandra Ramgoolam leads a 4-party coalition that won Sunday's elections in a landslide. The incumbent leader, Pravind Kumar Jugnauth, conceded defeat after early results showed his coalition had lost support. Ramgoolam's alliance has pledged to bring down prices of essential items, raise old age pensions, and overhaul the electoral system. Mozambique's main opposition leader has urged his supporters to disrupt key trade routes and ports. In a live stream broadcast late on Monday, Venancio Mondlane encouraged protests at the border with South Africa and the port in Maputo. Mondlane has rejected last month's election results as fraudulent, and protests last week brought the capital and other parts of the country to a standstill. Nigeria expects a 30% increase in crude output due to strengthened security and investment incentives. Output is projected to reach 2 million barrels a day by the end of the year, up from 1.5 million barrels in September. The increase could put Nigeria's output above its OPEC Plus commitment to limit production, which is currently set at 1.5 million barrels a day. And a Spirit Airlines plane was hit by bullets as it was landing in Haiti's capital, prompting authorities to close down the airport. Several airlines, including American Airlines and JetBlue, have suspended flights to the country. The incident marks an escalation of violence in Haiti, where gangs have seized control of large parts of the country. And a quick look at equity futures before we head to the break, building on from record highs once again for the S&P yesterday, but today the screen is leaning towards the reds, a little bit of a dip for S&P futures and European futures as we head into the open, but we'll have more on that in a moment. And coming up, how the fight against climate change is battling out here in COP29 as the world inches closer to its first major checkpoint on climate action. More in our Big Take next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa, our top stories this morning. Stocks trading cautiously after post-election Trump trades push Wall Street higher. The dollar hits a 1-year high and Bitcoin briefly tops $89,000. US President-elect Donald Trump moves quickly to install loyalists into prominent posts in his administration as Republicans edge closer to a House majority. And in today's Big Take, we look at what a Trump administration means for the global climate fight. It has just gone 8:30 a.m. across the Emirates. I'm Joanna Versace at the COP29 conference in Baku, Azerbaijan. It is the Leaders' Day today, so it's going to get busy behind me in the next couple of hours with many heads of states arriving to Baku to talk about some of those climate finance pledges that we have been talking about. But for now, let's just center on talking about markets again, because we saw another strong day for Wall Street. Some of the intensity of the rally got taken out yesterday, but still what we got was a better close for the S&P. New record record high. It broke through 6,000, so that is notable. The other notable phenomenon out of yesterday's rally was that it was broad-based. And in fact, it was a day where the tech sector didn't actually perform that well, which tells you perhaps about how this rally is going to look like and continue moving forwards. We had been speaking for most part of this year about how concentrated the rally is. Looking ahead, perhaps we will see a further broadening. The dollar also in focus. We saw a big jump yesterday. Today, about 0.1% higher. Yesterday, 0.6% higher. We are trading at the highest level in over a year. Another Trump trade that has been quite popular into and out of the election. Bitcoin also in focus, up 0.7% today, but we have rallied 30% since those election results. So the crypto community very happy with the return of President Trump to the White House, and that momentum continues. And then Brent sitting just below $72. There's some downward pressure coming through, and some signals from China yesterday, some disappointment on those fiscal measures weighing on the energy complex. But let's also turn to how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril, just give us an overview of how these markets are faring.
Yeah, as you alluded to, a bit of disappointment from last week's NPC on the fiscal push coming out from China, but we are also hearing this Bloomberg scoop that sounds like authorities are mulling a plan that would help to cut home buying taxes. So that's helping to lift sentiment, and you see the CSI 300 is higher on a day where most Asia stocks are actually down. Hang Seng for another session leading declines. Also worth noting here that the stronger dollar is a really uncomfortable backdrop for Asia equities. We are also seeing about a bit of risk off among EM Asia FX, the Thai baht, the rupiah, among those leading declines today. The yuan also hitting 3-month lows. Jumana.
Yeah, the strong dollar definitely having reverberations around the globe. It's going to be a bit of a theme in the months ahead. Avril Hong in Singapore. Well, SoftBank is expected to report a return to profitability in the September quarter thanks to a rebound in tech valuations that promises to boost Vision Fund returns. A technology reporter Min Jong Lee joins us right now. Great to have you with us. So just give us an overview of what we should be expecting out of these SoftBank earnings that will hit shortly.
All right, thanks for having me. Like you mentioned, we are expecting a strong quarter this time, thanks to a rebound in tech valuations, including companies like Coupang and DD Global. And a lot also has to do with some successful Indian listings among SoftBank startups. This includes e-scooter maker Ola, online retailer FirstCry. So for the first time in a while, the Vision Fund is expected to report some positive earnings, but we'll see what actually happens when they release numbers this afternoon.
Yeah, and obviously that is specific to this quarter, but what are some of the big picture plans that should be in focus from SoftBank over the coming quarters looking ahead? What's in the pipeline?
Right. So Masayoshi Son and SoftBank and Vision Fund has been kind of refining its focus to focus a little bit more on AI-specific companies. One of the recent investment has been reported as OpenAI and Perplexity AI. But of course, as Bloomberg reported earlier this year, one of the new focus area is chips, semiconductors. So there would definitely be something more to expect coming forward in those areas, but we have little visibility on what is officially going to happen. So we'll look forward to any commentary from SoftBank on that regard during earnings and in the coming quarters.
Great, thank you so much. Technology reporter Min Jong Lee there with an overview of what to expect out of SoftBank. Well, we're here in Baku for the COP29 climate talks, and in just over 5 years, the world will arrive at its first major checkpoint on climate action, a deadline to meet a series of green targets aimed at avoiding the most devastating impacts of global warming. But key economies and industries are failing to meet targets, and that was even before the re-election of Donald Trump to the White House. So for more on today's Big Take, our managing editor for climate and ESG, David Stringer, joins us from Melbourne. Great to have you with us, and of course very timely given the COP29 talks that are taking place. So Bloomberg Green examined some of the progress that's been made towards achieving those 2030 climate targets in a whole range of sectors. What did the findings show?
Well, morning, and absolutely incredibly timely with, as you said, leaders arriving there in Baku for talks at COP29. Look, we decided to look at a whole sweep of targets because we are almost halfway through what's regarded as a crucial decade to make progress in the climate fight. The world is required to cut emissions more than 40%. By 2030 to keep on track to hit net zero by mid-century. We looked at a whole range of industries, and the detail is available there on the terminal and on Bloomberg.com. What I would pick out is two trends. What we found is there are segments where progress is being made, but it's simply not fast enough. Renewable energy is a really good example of that. Some of the growth rates have been staggering. Since 2010, we know that solar, for example, capacities increased more than 40-fold. Wind energy more than 6-fold. Huge volume of clean power added last year, about half a terawatt. Yet even that isn't enough to achieve the world's target, which is to triple renewable capacity by 2030. Separately, we also saw those segments where simply progress isn't being made at all. We're going backwards. If we look at the world's forests, we know that about 130 nations pledged 3 years ago to halt and reverse deforestation by the end of the decade. And yet, what we saw is that last year, about 6.4 million hectares of forest was lost, that's an increase on the previous year, and It's way off track, about 45% higher than the rate you'd need to achieve the goal. So pretty depressing picture. And as you said, that's with US leadership. And as we know, we might see a very different disposition from the White House come January.
Yeah. I mean, so many different things to unpack here. But what I would say to the viewers is definitely sign up to our Bloomberg Green Daily because a lot of those statistics were in it. I actually noted the deforestation one and the fact that deforestation has actually been increasing contrary to what needs to be done. Really shocking there. What are the potential impacts of the failure to meet some of these end of the decade benchmarks? So what are the consequences? Do I even want to know the answer?
Well, I think, some of the key ones to pick out, of course, what we might think is that most ambitious goal of the Paris Agreement to limit the temperature rise above, pre-industrial levels to 1.5 degrees Celsius, that looks out of view. I mean, we've seen a lot of data and new evidence around that, even in the past couple of days. I think the trends that we're seeing in our analysis point to that being absolutely out of view. And what does that mean? Well, it means more extreme weather. It means that tens, if not hundreds of millions more people are going to find themselves put in jeopardy. It also has a big economic hit. Global economic growth will be slower if those temperature rises are not abated. And in fact, there's one recent assessment calculated that every additional 1 degree Celsius rise in temperatures could have as much as about a 12% hit to global GDP. So for both people and growth, the consequences could be stark, Yeah,
that certainly is the takeaway, and even more pressure, I would say, to come to some further agreements at COP29 on the financing front. Bloomberg's managing editor for climate and ESG, David Stringer, thank you so much. Great to have you on the show today. Well, as Donald Trump's cabinet takes shape, former White House Communications Director Anthony Scaramucci has weighed in on the U.S. President-elect's policy priorities. The Skybridge Capital founder told us that unlike in his previous administration, this time the Republican Party is 100% behind Trump.
There's lists of things that they'd like to do. And of course, they can't effectuate the government until January 20th, but they'll probably have reams of things that the president will sign on that day and in the first week in the White House. Some executive orders that will probably tighten the border, some executive orders that will provide greater clarity on things like the regulation of crypto, energy drilling, et cetera. I think one thing that people like myself are concerned about is the right to citizenship and the birthright issue. So not to overly get into that on a business show, but if you have a immigrant mom who perhaps is here illegally and she gives birth, are you not a citizen? I think we've always said that people in that standing as a citizen, I just don't want them to overly affect the culture which will affect the business community. It's just that they're all conjoined together. So the economy's doing quite well. The president's team is going to inherit a rising stock market, a rising economy, rising wages. And so, I just hope and pray they'll do a good job with the team that they put together.
And of course, I know that you do speak with a lot of people in Trump land. Do you expect there to be as much turnover this time around as there was in 2016 when people were kind of just, figuring out how the government worked, many of them perhaps not having worked in government before?
So, I think what happened in 2016 was that the RNC was sort of like a large corporation, and MAGA, the president's movement, was more of like a startup. And when he won, that startup took over the large corporation. So there was a very big culture clash inside the administration. And I think that's what led to lots of departures, lots of confusion. There were separate lines. Reince Priebus was running a sleeve. Steve Bannon was running another. Jared was running a third sleeve. I don't think you're going to have that under Susie Wiles. She's worked with the president for just under 2 years, and they have a good relationship. And I think it'll be more centralized. And I think that'll lead to more continuity and less argument and probably less departures.
Anthony Scaramucci, their managing partner at Skybridge Capital, speaking to Bloomberg's Scarlett Fu. Well, coming up, Chinese property stocks in focus as Bloomberg reveals Beijing may cut taxes for home purchases. All the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Baku for the COP29 climate talks. South Africa's quarterly unemployment data out later today is expected to show the jobless rate easing as power supply and investor confidence improves under the government of national unity. Bloomberg Intelligence says this should stoke a pickup in economic activity and job creation. Let's bring in our chief Africa correspondent, Jennifer Zabazaja, who joins us now from Johannesburg. Jen, just give us a sense for how this print could differ from what we've seen so far this year. It definitely feels like the economy is heading in the right direction.
Right, Jumana, and I mean, if you take a look at investor confidence, and we also talk a lot about energy security here, it has improved. But I think really the significance of this print will be whether or not it shows any sort of read-through as to where this economy is. And I want to take you back to the last unemployment print that we got earlier this year in August, because many analysts were saying that potentially that was a blip. And the reason for that was because we saw unemployment actually tick up north of 33%, and that was north of what the expectation was, which was closer to 32%. So many analysts said that was a blip because, again, like what we've been seeing a lot of security in this new government of national unity really hone in on a lot of the struggles in this economy. And so the question will be, what does this print now show now that, again, we've seen some investor confidence continue to filter into this market? We've seen a little bit of stability when it comes to the rand and volatility in that sense. But is that actually reading through into the job sector? And also, what are the sectors that it's actually going to be focused on? Before this last print that we got, we saw a tick up in informal jobs. And so this one will really be key to see whether or not we're seeing some improvements in things like manufacturing and mining and elsewhere. So we're going to be paying very close attention to this. And if we take a look at the expectation is that it will drop again to 32.8%. But still, that's quite high when we think about unemployment, and especially when we look at unemployment here in South Africa compared to the rest of the world.
Yeah, and like any other economy, you have to look at obviously the unemployment situation, but also the inflation situation. And you and I have had many conversations over the course of the last few months about the improving inflation profile in South Africa, which has allowed for the South African Reserve Bank to actually start cutting interest rates. How is this latest piece of data likely to factor into the SARB's calculus from here?
Yeah, it's fascinating that you bring that up, Jumana, because just yesterday we were speaking to an analyst who was saying a lot of the price action that we've actually seen within the South African market is imported. I mean, if we just take a look at what we've seen over the past week or so, the U.S. election, the stronger dollar having an impact on the rand. We've also seen China, again, the uncertainty there for investors having an impact here. And so, and as a result of all of those actions, we've seen the rand start to weaken a little bit. And so the real question will be, what is, at least internally, what is this South African economy doing on its own in order to strengthen? And that is happening separate from the other imported factors that are really having an impact on inflation, on unemployment, on the depreciation of the currency. And so it will be interesting to see sort of what this print says. We also will get a print about manufacturing, production, and also mining. And so potentially that shows a bit of strength and that the South African economy will be able to weather a lot of this volatility potentially until early next year, when we get a bit of clarity about how a lot of these imported factors are going to impact this economy.
Yeah, Bloomberg's Jennifer Zabazaja, thank you so much. We'll be with you shortly again. All right, coming up, Chinese property stocks are in focus as Bloomberg reveals Beijing may cut taxes for home purchases. Details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersecci in Baku today. China is said to be planning to cut taxes for home purchases as the government dials up fiscal support to revive a lackluster market. China correspondent Minmin Lo joins us right now from Hong Kong. Minmin, just walk us through about the proposed new regulations, what impact this could have on home sales. Clearly, it's a priority for Chinese authorities here to get that real estate market moving again.
Yeah, so sources are telling us that the government is working on a proposal to allow these mega cities like Shanghai and Beijing to cut the deed taxes from 3% to 1%. They're also looking at potentially scrapping the distinction between luxury homes and ordinary homes. Now, these are homes, luxury homes that are above a certain amount of square feet. In Shanghai, it is above 144 square meters, and the current regulations require that if you sell one of these non-ordinary or luxury homes within 2 years, you have to pay a value-added tax, quite a steep tax of about 5%. So scrapping that distinction would make it cheaper for homeowners to upgrade their homes. And of course, this comes after a series of measures that had been introduced over the past couple of months, including the easing of home buying curbs, lowering of down payment ratios and existing mortgage rates as well. The government really putting its weight behind stopping this decline in the housing sector.
Yeah, so they're trying to stop the decline in the housing sector, but also trying to stimulate the economy. And a little piece of disappointing news came through this morning. Credit expansion has slowed more than expected. How significant is the read that came through this morning?
Yeah, it just seems like markets are just shrugging off the impact of these policies, because if you look at the developers index, the Bloomberg's index that tracks these developers, they have been pointing down despite the news about this potential new regulation. And if you look at the credit expansion, as you said, it had slowed or grew slower than expected. It went up by 1.4 trillion yuan, which is 1.5 trillion yuan, and that is the aggregate financing increased by 1.4 trillion yuan. That is below analyst estimates of 1.5 trillion yuan, also below last month's print of 1.8 trillion yuan. And bear in mind, more than 3/4 of that aggregate financing is underpinned by government debt, government bond sales that is driving that up. That means corporate and household borrowing is still very lackluster. And if you look at the past 5 years average, you can see on the screen that the corporate and households borrowing is still far below that average number, despite some of the stimulus measures that have been rolled out so far. So still a lot more that needs to be done to really bring confidence back into the economy.
Well, China also concluded the biggest shopping festival, Singles Day shopping festival yesterday. Typically tends to be a good bellwether for consumer sentiment, consumer trends. What would you say are the main takeaways from this year's Singles Day?
Yeah, many of these e-commerce platforms have stopped publishing their actual GMV sales numbers since about 2 years ago. But preliminarily, we are hearing from Alibaba, for instance, saying that their GMV sales did point upwards, so better than the previous year. But perhaps analysts are saying it's not looking like it will be above pre-pandemic levels. So what are people buying? Alibaba is saying the top categories are home appliances, electronics, beauty and apparel. Home appliance obviously getting a big boost from that equipment upgrading program that is subsidized by the government. And another trend that I'm hearing from analysts is that it used to be that people would just buy. If they need a lipstick, they might buy 3 or 4 of them. But now people are buying what they need. They may just get 1 of them, but they may be willing to shell out a little bit more for that better quality single quantity product. And also bear in mind, this year's promotional season is longer than the previous year. It's about 10 to 12 days longer for Alibaba, at least a week longer for most of these other platforms. So that could have boosted the overall GMV sales numbers as well.
So interesting, the context around Singles Day there. Bloomberg's China correspondent, Min Lo, thank you so much. Well, a quick look at markets before we head to the break, onto the second hour of Horizons. And what we're seeing today is, contrary to the price action over the last couple of sessions, a bit of red on the screen. Can you believe it? The S&P futures leaning, well, now we're leaning flattish, but we were more negative a short while ago, but down about 8 basis points after breaking a record high through that key 6,000 number. European futures leaning towards negative, down 0.5%. But that is it for our very first hour of Horizons Middle East and Africa. I'm Jumana Bersachi in Baku. Stay with us because the second hour is coming up with Jennifer Zabazaja joining me from Johannesburg. This is Bloomberg. We'll be right back. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Stocks trading cautiously after post-election Trump trades push Wall Street higher. The dollar hits a 1-year high and Bitcoin briefly tops $89,000. Israel says headway is being made in US-mediated efforts to achieve a ceasefire in Lebanon, but still wants guarantees to resume military operations if Hezbollah infringes. Climate negotiators at the COP29 climate summit agree on rules for a UN-administered global carbon market. We will be speaking to some of the leaders gathering in Baku on what to expect in the fight for climate cash. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi at the COP29 conference in Baku, Azerbaijan.
And I'm Jennifer Zabazaja in Johannesburg, where it is just gone 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. Jumana, busy morning and day for you.
Yes, but it's good to have you with me on the second hour of the show, Jen. So many things to talk about here. We've got plenty of interviews coming up in the second hour of the show as well, including with the Finland President. So stay tuned for that one in the latter half of this show. But for now, as ever, let's just kick off the show taking a look at how markets are faring. Strong end for Wall Street yesterday once again. We had the S&P end up in the green with perhaps slightly less strong intensity than the rally of the prior sessions, but still making record highs, breaking through 6,000. The dollar also in focus. Yesterday, very strong day for the greenback, up about 0.4%, 0.5%, up 1% in the last couple of trading days, and then sitting at a 1-year high now. So the USD strength trade has been one of the Trump trades that people have been putting on since the election. Not just the USD, though. We talk about Bitcoin. Yesterday was a big focus for markets. We're getting closer to 90,000. Record high for the cryptocurrency. This, as I was reading somewhere, the total value of the cryptocurrency market is set to break $3 trillion market cap. So again, that market is going from strength to strength on hopes that there will be a more supportive administration coming to the White House for the cryptocurrency community. But the one part of the market that isn't faring so well over the last couple of days has been energy, and you can see Brent now sitting below $72. A slight bit weaker today on today's session. Yesterday down 3.5% on disappointment coming through from China. But let's also check in on how markets in Asia are faring this morning. Avril is in a Singapore studio piecing together all of the bits of data coming through from US stock markets performance to some of the data coming through from China today. How are markets reacting?
Yeah, we got data out of China yesterday showing credit disappointment, and I think that just speaks to how it's absolutely critical for more economic support from Chinese authorities. But it is risk off because, as you know, stimulus measures or promises have just been disappointing of late. So Asia stocks mostly down, but I wanted to focus on what we're seeing on the greenback because, of course, that climb has been really uncomfortable for Asia stocks. And if you take a look at how it is risk off across Asia currencies, you're even seeing that impacting the baht, the rupiah. The Chinese yuan is in focus because it's getting a bit of a double whammy, as one analyst puts it, as investors weigh out what Trump's tariffs might mean, but also the prospect of higher terminal rates in the US. This is what we're seeing in stocks as well as FX in the region. Jumana.
Avril, thank you so much.
I'll actually pick it up, Jumana. Thanks so much. Let's pivot to the U.S. Republicans are on the brink of clinching unified control over the White House and Congress under Donald Trump. The president-elect, meanwhile, is narrowing the field of candidates for major appointments such as Secretary of State and Treasury Secretary, which could be announced this week. Let's bring in Bloomberg senior editor Bill Ferries in Singapore for us. So, Bill, I mean, we're getting a raft of information about who these picks are. What is this telling us, really, though, about what Trump's priorities are when he takes office come January 20th?
Well, I think one thing it tells us is that the president-elect has learned a lot from his first term. He's moving very quickly to make some key personnel appointments. He's focusing on some critical issues that helped him win the election, like immigration, for instance, with a couple of his early picks. He's also he's learned he can benefit from having some of his top picks with him in the White House because those officials will not need any Senate confirmation to join his administration. They can start on day one and help him with the raft of executive orders he's expected to release. And it shows he has some confidence that Republicans will hold on to the House of Representatives. He's already plucked two Republican members of the House he says will serve in his next administration. That will require special elections to replace, but he's obviously confident that the House is already on his side and that he'll be able to live without those two members being there for some period.
So on the foreign policy front, we're now seeing some names tapped for National Security Advisor, Secretary of State as well. Also, we're just out with the story, BNR out with the story saying Trump's foreign policy team reflects also his stance on Israel, Iran. The new administration will likely try to expand the Abraham Accords. So it looks as though they're planning to achieve quite a lot on the foreign policy front. What do these picks, these names, the language that's coming out tell us about how the U.S. is thinking about the world in the second term?
Yeah, so a couple of the key picks that have come out in just the past several hours. Mike Waltz, a congressman from Florida, a former Green Beret who served in Afghanistan, is going to be the next national security advisor. Again, that's a post that does not require Senate confirmation, so he will start on day one. And then Marco Rubio, the senator from Florida, apparently going to be the most likely nominee for Secretary of State. So Rubio, perhaps best known in foreign policy for his views on Latin America, on countries like Cuba and Venezuela. He is also a staunch pro-Israel supporter and a big hawk on China, as is Mike Waltz, the next national security advisor. So I think the message is a very tough stance on China, but also you have two people who are very much pro-Israel. Rubio, a lot of comments of recent comments of his circulating about whether he has some qualms about Israel's push in Gaza, and he said that he'd like to see Hamas totally destroyed. So I think you have a team that's coming together that's going to have full backing for Israel's policies going forward, and also people who would like to see if the U.S. can start to pivot more of its focus towards Asia. So a very interesting team, but I think that reflects President Trump's views and what he campaigned on the last 6 months.
And Bill, just the rate at which we're getting a lot of these names, the expectation really is potentially we will get a name for Treasury Secretary. Can you just give us the latest on who is being floated and what this could potentially, again, mean for Trump's focus then on the economy?
Yeah, so we're still looking for some clarity. I mean, some of the names that have been floated are Wall Streeter Scott Bessent, who was a big advocate for Trump throughout the campaign. He's very much supportive of Trump's policies on cryptocurrency, very supportive of tariffs that Donald Trump has spoken of. There's also hedge fund billionaire John Paulson. There's, I guess a raft of other names out there, including some members of the Senate. It's just we haven't gotten a lot of clarity in the last several days, but given what we've seen and the importance of the picks that Trump has made so far this week, I would expect Treasury to come through in the next few days.
Bloomberg senior editor Bill Ferry's in Singapore. Thank you so much for getting us up to speed on who these picks are. Now, in the Middle East region, Israel says headway is being made in US-mediated efforts to achieve a ceasefire in Lebanon, but wants guarantees to resume military operations if Hezbollah infringes. It comes as Israeli Foreign Minister Gideon Sa'ar says Russia could help with preventing arms from reaching Hezbollah, something which is vital to the success of any arrangement in Lebanon. Joining us now to discuss this is Bloomberg's Honor and in Istanbul. It's interesting that these ceasefire discussions are actually continuing and that Amos Hochstein is still trying to get a ceasefire deal across the line before the incoming administration takes office. What are the state of talks? I'm hearing mixed things from both sides.
Jumana, as you said, there is a currently diplomatic push underway by Israel, and that's focused on the U.S. primarily. Netanyahu's strategic affairs minister, Ron Dermer, was in the U.S., met with President Donald Trump, and today he is expected to meet Antony Blinken as well. The Israeli side is pushing for U.S. mediation to get a ceasefire with Lebanon and Hezbollah. But the key thing that they're pushing for right now is to make sure that they reach a deal whereby Hezbollah does not get more arms shipments, does not move more arms into the south of Lebanon, that would allow the militant group to attack Israel in the future. And the key thing that Israel is expecting to get out of this possible pact, if it materializes, is that it should be given a guarantee that should there be an infraction on the side of Hezbollah, Israel should be allowed to freely operate in the Lebanese airspace and territory to basically fight Hezbollah, resume fighting against Hezbollah again.
And Onar, I mean, the interesting point really I found with this was Russia potentially playing a role in this. I mean, how would that work in this current situation that we're seeing with the crisis?
So we know that Ron Dermer, the Israeli minister, was in Moscow last week before he traveled to Washington to meet with American officials. There, Israelis are pushing for a Russian buy-in to this plan, basically. And the key objective there is to make sure that Russia, with every influence it wields in both Lebanon and in Syria, it tries to curb, if not stop, arms shipments to Hezbollah in Lebanon via Syria. That's a critical element of any future ceasefire deal between Hezbollah and Israel. And Israeli Foreign Minister, the newly appointed Foreign Minister Gideon Sa'ar, said as much during a briefing yesterday to journalists in Israel. He said that, although he didn't elaborate, he said that they would like to see Russia play a role in this. And the underlying or the behind-the-scenes story to that is that Israel wants Russia to wield and use its influence to make sure that Hezbollah does not get arms shipments from Iran or from other countries through Syria in the future. That's the play for Israelis as they try to get Russians buy into this plan or this proposed act.
All right. I will pick it up from here.
Istanbul, thank you so much. Sorry about the awkward pause there.
Yeah, all good. Thanks, Jumana. Let's tease ahead. We discuss the challenges of a transition to clean energy with the European Commission Climate Action Commissioner up next at COP29. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Baku. China is said to be planning to cut taxes for home purchases as the government dials up fiscal support to revive a lackluster market. China correspondent Min Lo joins us now from Hong Kong. Min, just walk us through the proposed new regulations and what sort of impact this could have on home sales. We know that the Chinese authorities have been trying to shore up this part of the market.
Yeah, so what we're hearing from sources is that the government is planning to, they're considering this proposal that would allow mega cities such as Beijing and Shanghai to cut the deed tax from 3% to 1%. And they're also looking at removing this distinction between ordinary versus luxury homes. And that means that people may no longer need to pay that value-added tax of about 5% that applies to luxury homes above a certain square feet when they sell these homes within 2 years. So this will basically make it cheaper for people to upgrade their homes. And of course, this comes after a series of other measures, including the easing of home buying curbs, the cutting down of down payment ratios and existing mortgage rates as well to try to shore up the property sector. And we did get a little bit of a green shoot in October when we saw for the first time in about 16 months home sales picking up. But right now, looking at the stock market, it looks like stocks are performing quite mixed, and it seems like markets are shrugging off this potential new regulation, saying that it's not really enough to turn the sector around.
Yeah, and we've been hearing that for quite some time, Min. We also got some data about how China's credit expansion had slowed more than expected. I mean, how does that factor into a lot of these troubles that we've been seeing with the economy at this point?
Yeah, again, it just goes to show that the stimulus that has been rolled out since September perhaps is still not showing up in the data in terms of shoring up that confidence, because if you look at the credit data, overall aggregate financing came in at 1.4 trillion yuan, below the analysts' estimates of 1.5 trillion yuan and below last month's print as well of 1.8 trillion yuan. And bear in mind, underpinning that huge figure is government borrowing. More than 3/4 is because of government bonds. And that means that corporate and household borrowing is still quite lackluster. Take a look at the chart. If you compare to the past 5 years averages, the corporate and household borrowing is still way below that average number, despite all the stimulus that we have seen so far. So that's why it's so important. The PBOC had pledged to continue to have an easing monetary policy. Economists expecting the PBOC to cut the RRR ratio and also interest rates going into next year.
And Min, China has just come to the end of its shopping festival, Singles Day. Are there any signals that we can glean about the state of the Chinese economy, the path ahead, and perhaps what it means about consumer sentiments?
Yeah, it's starting to be a little bit difficult to tell ever since these companies stopped publishing the actual GMV sales data. But we know that Alibaba, for example, had said that those numbers had pointed up from the previous year. What are people buying? Alibaba is saying the top categories include home appliance, electronics, apparel, and beauty. Home appliance probably got a big boost from that equipment upgrading program, the subsidies given by the government. So you have the likes of Mediate, Xiaomi. These are some of the brands that hit that milestone of 100 million yuan in GMV sales. But bear in mind that data could be a little bit distorted because of the longer promotional period this year, at least a week or more longer than last year's. And also another big trend, some analysts are telling me, instead of that mindset of buy, just accumulating more stuff. If you need a jacket or a lipstick, you buy 3 or 4 of them. Now people are a little bit more selective. They're buying what they need. They may get just one jacket, but they're willing to shell out a little bit more for that more high quality product.
Wow, I wish I could just keep buying. It's really fascinating, the trends that we're watching there. Bloomberg's China correspondent Min Lo, great reporting as always. Great to get you on this morning. Now, coming up, a 3-term Prime Minister of Mauritius is set to reclaim the top job a decade after being voted out. More on this next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. A 3-term Prime Minister of Mauritius is set to reclaim the top job a decade after being voted out. Navinchandra Ramgoolam leads a 4-party coalition that won Sunday's elections in a landslide. For more on this, let's bring in Bloomberg's Ndiro Oganga joining us from Kigali. So Ndiro, talk to us about the complete turnaround in the election results from the earlier predictions. This just seems to be a theme of 2024.
Jen, so MSM has been in power for the last decade and they've been marred with controversies. The people wanted change. There have been allegations of corruption, fraud, nepotism and mismanagement of the country's affairs. This is an administration that has had several court cases, and although they've won them, the court of public opinion remains begrudged. And then you have the winning alliance led by Ramgoolam, who campaigned on bread and butter issues, promised to reduce the cost of fuel, medicine, food, increase pension, and these are issues that resonated with voters, and we had an electoral turnout of about 80% and a resounding victory. And we can draw parallels here with Botswana, where the government of the day was expected to win based on incumbency, based on the rural support that they enjoyed, and also because the economy is doing great. But that was not the case. What was expected was that support would shrink just as it shrank in South Africa. However, we see that the people are disgruntled. This is a country that has been ruled by 3 families since independence, and they just keep shifting political allegiance just to maintain their grip in power. Yet people want democracy, they want open governance, they want efficiency, and they want long-term economic development. So these are some of the factors that influence this election.
Yeah, I mean, you touched on the state of the immersion economy there. What is the current state of the economy? How significant a role did it play into these elections? Because when we're doing the postmortem of the US elections, there has been a lot of analysis about the state of the economy being the #1 feature that people were concerned about. Was it a similar theme that resonated in Mauritius as well?
Jumana, there are 2 parallels here. On one hand, you have a cost of living crisis, and also you have high unemployment amongst the youth. But on the other hand, some fundamentals are really looking great. If you look at their currency, it had a really great run in the 3rd quarter. It gained by 5.7% against the US dollar. And in the 4th quarter, it's expected to continue strengthening on the back of tourism inflows, with 1.4 million tourists expected to come into the country. They're also projected to have a growth of about 6% and above over leading to the year 2030. They're expecting the tourism numbers to grow to about 2 million. And foreign direct inflows are at a really high of 860 million, because this is a country that is very favorable for investment on the African continent. So you see 2 contradictions here. And then you have economists from the Ramgoolam camp saying that the government is just showing the people a mirage. The economy is not doing that great. Public debt is really high. Inflation will wipe any gains that have been made. And there's need for key reforms if they're to save the current state of the country.
And Ndiro, I mean, when we take a look at really putting this into context with the rest of the elections that we've seen throughout the continent, I mean, I wonder what sticks out to you. Do you think these bread and butter issues are really what's been carrying a lot of these election victors really throughout the continent?
Absolutely, Jen. If you look at a country like Botswana that just came out from the elections, even though the fundamentals were looking great, this is a country that their revenue from diamond had fallen, and hence the government did not have enough money to go around. And so you have people complaining that they're hungry. If you look at South Africa, these are some of the factors that influenced their election. If you also look at Nigeria, even though the election has come to an end, these are some of the factors that continue to dog the governments of the day, even though they come into power. Nigeria had We Are Hungry protests. In Kenya, the finance bill protest was seen leaving many dead because people cannot afford to put food on the table. Governments are trying to squeeze revenue out of the people to manage their day-to-day expenses. So the people are constantly saying that the cost of living is high and the government needs to do something in order to change the situation of the people and also grow the economy.
Bloomberg's Ondira Ganga, thank you so much for the overview, not just of Mauritius, but of all of the issues that some of these African incumbent leaders are facing. Now, coming up, the climate funding fight facing world leaders at the COP29 climate summit. We will be speaking to the European Investment Bank President Nadia Calvino next. This is Bloomberg, and that is a picture of futures as we head into the European session. We're leaning towards the red.
This is Horizon's Middle East and Africa, our top stories this morning. Stocks trading cautiously after post-election Trump trades push Wall Street higher. The dollar hits a one-year high and Bitcoin briefly tops $89,000. U.S. President-elect Donald Trump moves quickly to install loyalists into prominent posts in his administration as Republicans edge closer to a House majority. And climate negotiators at the COP29 climate summit agree on rules for a UN-administered global carbon market. Coming up, we speak with Finland's President, Alexander Stubb, joining Jumana on set there in Baku. But right now, it has just gone 7:30 a.m. in South Africa. I'm Jennifer Zapasaja in Johannesburg.
And Jumana Versace in Baku, where it has just gone 9:30 a.m. Welcome to the second hour of Horizon's Middle East and Africa.
Yes, Jumana, you have a busy day ahead of you there at COP, but we're also paying close attention to what the markets are doing. Yesterday was a holiday in the U.S., so we didn't see treasuries trading, but we did see U.S. equities continuing on their march upwards. Right now, seeing a bit of downside, but don't be fooled because on Monday we actually saw the S&P again close above that 6,000 print, continuing on that march upward that we've seen since that Trump re-election last week. And continuing on with the so-called Trump trade, we're seeing the effects really in the Bloomberg dollar spot index right now. We saw the dollar index hitting a one-year high right now, continuing to see some upward momentum. But we will get some prints later this week on U.S. CPI, some other data prints. And also we'll be hearing from Fed speakers potentially that will have an impact on the dollar. But right now, the dollar really affecting a number of EM currencies and currencies really globally. Bitcoin continuing on that tear we're seeing. Look at that right now. When I joined the show yesterday, we were close to $80,000 right now. Look at that, nearly upwards of 88,730 about what we saw again on Monday, crossing 6 key price level milestones. So significant tear for Bitcoin. Also have Brent crude up there right now, down about 0.3%, holding the biggest drop in 2 weeks right now, just about 71.60. And that is coming on concerns about the China market, also U.S. dollar strength, and concerns that potentially we will see an oversupply within the market. But I want to zero in on Bitcoin because it's really been fascinating what we've been seeing over the past few days. Again, this is a chart that's showing what we've seen with the price action just since November 5th on election day. The cryptocurrency is up nearly 30%. The last time we saw a rally of this sort was back in early of 2021. So the question really is, how much room does Bitcoin have to run? How much upwards momentum? And again, will it continue to pull some of these other cryptocurrencies with it? But that is just a look at what we're seeing there. Let's pivot, though, to how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, investors in Asia also weighing out that Trump trade. What will these potential tariffs mean for economic prospects in the region, especially since he's appointed China hawks? And against that backdrop, you're seeing Asia stocks today, they are treading lower. There is a bit of optimism in China because of word that we're going to potentially be getting that fiscal push on the property front. But I wanted to highlight this perspective from MLive's Mary Nicola. And she writes on the blog that if you look at Asia ex-Japan, they actually tend to do pretty well when US financial conditions ease. But this chart shows you how that relationship has kind of broken down recently, attributing this to the greenback resilience, because this is something that cuts into the returns for domestic shares for Asia investors. So something to keep in mind as we watch for the potential headwinds. Guys.
Yeah. That is a major theme as we spoke about the strength of the USD potentially having ramifications across these EM markets, Hong Kong and Singapore. Well, developing countries will need trillions of dollars in the years ahead to deal with the growing impacts of climate change. One of the major challenges facing negotiators at this year's COP29 climate summit is how to boost the climate finance donor pool. The process has been made harder by the re-election of Donald Trump, who pledges to enhance fossil fuel production and shun climate cooperation. Really happy to say that European Investment Bank President Nadia Calvino joins us on the show. Great to have you here. So I was just highlighting that this COP was really centered around climate financing. That is the goal of this COP, and one of hopefully the outcomes that we're going to see at the end of the 2 weeks. What role do you envisage for the EIB in climate financing?
Well, I'm delighted to see you again and to be here with you. And I'm delighted to see that there's a vibrant atmosphere here at COP29 because indeed we need to stay the course. In the last years, we've made progress in mobilizing climate finance. The European Investment Bank has consolidated its role as the climate bank. We play a very important role within the family of multilateral development institutions to mobilize this green finance. And I hope that the result will be positive in that regard.
You know, when I look at the numbers, the financing needs are so great. The IEA estimating that something like $6 trillion is needed to be mobilized and financing for developing countries by 2030. That is equivalent to around $1 trillion a year, and that's a conservative estimate. Do you think that it is actually feasible that we can get to these levels of financing?
Well, I don't think we have a chance. There's no plan B. We have to really get things moving. We have to get the change going. But the good news is that on the one hand, the impact of climate change is increasing, the negative impact and the cost of climate change. But there's a revolution in the area of energy in full swing. I think that the private sector and companies have realized that this is an opportunity, that there's no other option but to get on with it. Yeah. And it is happening as we speak. So we have to, I think, just stay the course, continue on the right track, and so climate action will reach its goals.
Can I just ask you specifically within Europe, what is the outlook for further joint borrowing, coming at a time where obviously many economies within Europe are facing political pressures and alongside that budgetary pressures as well? Does that create a constructive environment to lead to more joint borrowing out of Europe?
You know, beyond political debates and policy debates also, the reality on the ground is that there is a decoupling between economic growth and CO2 emissions. And I think Europe is the prime example of that. And that's why Europe has been leading this climate action quest and should continue to go on the right track. It's not only a matter of climate change, it's also a matter of security. The war in Ukraine has shown that Europe needs to become more independent. We cannot continue to rely on fossil fuel producers. So it's a no-brainer, you know, we have to get on with it.
How should Europe be thinking about the return of President Trump to the White House? Is the continent better prepared this time around for what may happen?
Well, the transatlantic relationship is strategic for Europe and for the US, I would say. And so we have every interest in finding win-win solutions, having a constructive relationship. I was just asking President Stubb, precisely from Finland, about his conversation with President-elect Trump yesterday.
I'll be asking him in a few moments.
Well, you know, I think this is a very interesting information you're going to be getting. You know, what was this conversation like? We have every interest to have a constructive attitude and to find win-win solutions. In the area of climate, again, you know, it's not a matter of political discourse. The reality on the ground shows that the impact, the negative impact, is growing and it's becoming visible. there's very strong support on the side of citizens and companies for climate action. We just published a report, a survey by the European Investment Bank that shows that 94% of companies actually want to continue to have climate action, and they are aware and they see that there is a need to accelerate the change that is already happening on the ground.
So the big topic, I guess, in Europe right now is what to be done looking ahead to the future to increase productivity, increase competitiveness. Many people drawing on some of the takeaways from the Draghi report. What role do you see is the EIB playing in helping enhance Europe's competitiveness?
The European Investment Bank has a key role to play because we are quite unique in that we are a very large multilateral development bank with a 600 billion balance sheet, but at the same time we're present in each and every corner of the European Union. We are a local bank. We think globally, we act locally. And so we have a very important role to play in mobilizing private investment to the benefit of Europe's competitiveness. And at the end of the day, the challenge is making competitiveness and climate just two sides of the same coin. We need to ensure that Europe continues to lead this climate transition whilst increasing its productivity and competitiveness, and that requires mobilizing private finance, scaling up our actions, and that's what we will be doing going forward.
What do you think the number one priority from the Draghi competitive report is for Europe? What should be the focus?
There are two key messages coming out of the expert reports that have been published recently, the Letta report, the Draghi report, the Inisto report now, and it is, first of all, reducing red tape. Simplification, integration of markets in Europe. Let's create an integrated market in those areas which have not been integrated so far, from energy to telecoms. That's the first key message. And the second key message is we need to scale up our investment. We need to close the gap vis-à-vis other leading jurisdictions in the world and support companies, European companies, growing. Our objective should be that ideas, companies and technologies which are born in the EU can remain, grow and prosper in the EU. And the European Investment Bank will play an important role to that regard.
Okay, I just want to round up the discussion with a question about nuclear energy, because again, this is coming up as one of the potential energy solutions as we look ahead to rising and growing energy demands out there. What is the EIB's approach to funding nuclear energy?
We have been financing nuclear, mostly security, the fuel cycle, R&D, research and development. We have just end of last year, we have approved two important investments into nuclear having to do with security, upgrading of the systems that exist. And we're interested to invest in all key technologies for the green transition. So every project, each and every project will be assessed on its merits from the perspective of security, from the perspective of sustainability, financial sustainability, environmental sustainability, and technical sustainability. That's what we've been doing until now, and we'll continue on the same line.
Nadia Calvino, always a pleasure to chat to you. Thank you so much for joining us today on the show. European Investment Bank President Nadia Calvino here with me at the COP29 summit in Baku. Well, coming up, stick with us. We have more world leaders joining me at the COP29 summit. Finland's President Alexander Stubb up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bracecci in Baku today. Well, it is day 2 of the COP29 climate conference here in Baku, Azerbaijan, where the focus is gaining agreement on a new global goal for climate finance. So let's get straight into it. Join me now is Finland's President Alexander Stubb. Mr. President, great to have you with us on the show. It feels increasingly like we're moving towards a multipolar world with several challenges at play, be them geopolitical challenges, wars on the European continent, wars in the Middle East, inflationary challenges, which arguably cost many incumbents their seats. I just wonder whether, in light of all of these issues and challenges facing the world, whether the climate agenda is moving lower down in the set of priorities for world leaders.
Well, it can't. It must not. And to a certain extent, if this was some kind of a Maslow hierarchy of needs, I think climate is one top of the food chain, if you will. But the truth is that we live in a world which is more multipolar at a time when we actually need more multilateralism. So multipolarity has led to chaos or nation states doing deals, whereas multilateralism is about international institutions. Because we have these global goods that we have to take care of together, like climate change you can't do alone, demography or immigration you can't do alone, technology you can't do alone, pandemics you can't do alone, economy you can't do alone. So right now we are in a slightly complicated situation, but I'm sure it'll settle.
Sticking with the green theme, though, so to speak, the Europeans have been crafting a response to the Inflation Reduction Act of the outgoing now Biden administration. What elements can we expect to see out of the European Green Deal?
Well, I think it's very important that we cooperate closely with the United States because, first of all, we are value-based and, I think, interest-based allies. So if we get into this sort of tit-for-tat type of tariff kind of fight with the US, I think we're in trouble. We need to do the green transition together. Let me simplify. Europe emits about 5% of all the world's CO2. The United States emits about 15%. China emits around 30%. So it's important that we find the technological and trade means to deal with this together between Europe and the United States. Well, and China needs to pay too.
Yes. So let me just pick up on that transatlantic alliance that you just spoke about. You put up a tweet saying you had a very good phone call with President Trump, President-elect Trump. You congratulated him on his clear victory. What are your hopes for the second Trump presidency? How do you see it affecting the European continent?
Yeah, well, I of course focus very much on US foreign policy under Trump, and I think his agenda is quite clear. He talks about ending the war in Ukraine, so we discussed that yesterday. He talks about ending the war in the Middle East. He talks about the US as a competitor to China. We talked about that. He talked about Europe taking more responsibility for its own defense and security. We talked about that. So I think it's pretty clear speak when you talk about American foreign policy. Then of course there will be challenges. You know, tariffs can be a challenge. Climate issues can be a challenge. But the truth is that throughout history, the United States and Europe have usually seen eye to eye, and I'm sure we'll be doing that again in the next 4 years.
Do you expect perhaps this next term to be less combative towards Europe?
I think the United States needs Europe. But Europe needs to understand that the United States has changed. That means that we need to take more responsibility for what we do, for instance, in terms of security. And when that happens, I think the United States, whose number one competitor is China, will look at Europe and say, okay, about 20%, 25% of our allies are right there in Europe. Let's play ball with those guys.
Can I just pick up on Ukraine? I know you spoke about it with President Trump, and he seems to think that he can secure a peace deal between Russia and Ukraine. If that does happen, what is the likelihood that it's done in a way that's just and fair for Ukraine?
Well, in my mind, Ukraine needs four things. One is territory, and here we don't know where things are going to settle. The second one is security guarantees. So probably territory and security guarantees in these negotiations will go hand in hand. And of course, in my mind, eventually EU membership and NATO membership. The third one is justice, so Russian war criminals indicted. And then the low-hanging fruit is actually number 4, which is reconstruction. It's difficult to say at this stage, but I think we in Europe and the rest of the world needs to understand that Donald Trump is very serious about getting a peace deal sooner rather than later. I have myself said that there's a window of opportunity for these negotiations between the election and the inauguration day. Let's see what happens.
From an economic perspective, should the Trump administration go ahead and start applying tariffs of up to 20% on European goods, how should Europe respond? And can it respond, given economically the continent is in a worse situation than the US right now?
Well, I'm just a humble president of Finland, so I'm not going to give advice to the United States what they should or should not do on trade. I come from a small country. We have an open economy, and our success has actually been based on free trade. So in that sense, I personally am quite skeptical about tariffs because it does lead to this sort of competitiveness of tariff, whereas as a matter of fact, we should go for competitiveness in general. So let's wait and see what happens. Let's see where the tariffs are targeted. Let's see how Europe responds. A final point on that. Important that free trade in one form or another continues between Europe and the United States, especially if the main competitor for the US in trade terms is China.
Yeah, that's a good place to leave it then. Mr. President, thank you so much for joining us today. That was Finland's President Alexander Stubb. Well, coming up, Germany's president steps in to mediate talks over an early election date following the collapse of Chancellor Olaf Scholz's government. We're live in Berlin next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zapasadja in Johannesburg. Now in Germany, the president has stepped in to mediate discussions over the date for early elections due to the collapse of Chancellor Olaf Scholz's government. For more on this, let's bring in Bloomberg's Oliver Crook, who is joining us now from Berlin. So, Oliver, talks between parties deadlocked, even more uncertainty and complications for this government. Any clarity on when we'll get a date?
Yeah, so listen, this is going to be a sort of a process that unfurls over the next couple of weeks, and you might not be shocked to learn that actually the German election process is pretty complicated because Scholz needs to call a sort of no confidence vote on himself first, and then you have to get to the election. So really the question is the timeline over there. Scholz has wanted to take a little bit more time because he wants some procedural legislation that he still wants to get through. He wants to deal with some of the critical business of government, but he also says that there needs to be enough time in order for there to be adequate preparations for this election so that there is no doubt in the election, right? One of the big concerns that we've been hearing about over the last few days is there's a concern about a paper shortage, that there would not be enough ballots in time in place before this election. Of course, Friedrich Merz, the leader of the opposition, the CDU, Merkel's traditional party, says that this is all sort of politicking and sort of playing games. But what we're going to get today is we're going to have the election committee meet. They're going to make an assessment of basically how prepared Germany is for that election. But really the event to watch, guys, is tomorrow because we're going to have Olaf Scholz before the Bundestag at 1 p.m. He's going to give a 30-minute speech to talk about the crisis here in Germany, followed by a 2-hour debate across the floor of the parliament, which is really primed to be extremely fiery and very emotional.
And Ollie, I was obviously taking a look at some of the latest polls suggesting that CDU are ahead, but then also AfD have gained a lot of ground as well. What could the next coalition government in Germany look like?
Yeah, I think, Jemana, this is a really interesting point right now, particularly since we do have the latest polls and the only poll that I've seen so far that has been conducted only since the government collapsed. And we've seen a few things shift within those polls. So just looking at that, you can see it on your screen there. The CDU is number one at 32.5. The AfD, which is the far right in Germany, which is a sort of a party that has not had really any sort of real traction in Germany's sort of modern history until very recently, is up at almost 20% now, which is just shy of that high watermark they got earlier in the year of about 22%, then followed by Olaf Scholz's party, the SPD, at about 15%, and then the Greens on downward. What I think is interesting is what we've learned from this poll is that all of the sort of top parties have gained since the last time this poll was conducted, which means that a lot of the smaller parties, people maybe that were voting more in protest, now that there's a real election on the horizon, you're starting to see some of that support go up, but it's being distributed fairly evenly among the sort of top parties there that are including the AfD, the CDU, and the SPD. Currently, I think that the assumption is going to be that obviously you'll have a Chancellor Friedrich Merz. The question will be, will he potentially be able to enter into coalition with Olaf Scholz and the SPD for a sort of grand coalition, which, remember, was the arrangement we had for the last years of Merkel, where Olaf Scholz was the finance minister, but we're still some distance away. So we're going to have to see how this unfurls over the next couple of weeks.
Yeah, you raised some really good points there. And also earlier on in the show, we were speaking to the CEO of the Munich Security Conference, who was saying that perhaps the new chancellor could have a good or even better relationship with the incoming US President, Donald Trump. So something to think about as well from a transatlantic standpoint. Bloomberg's Oliver Crook, thank you very much. We're going to leave you with a look at equity futures as we head out towards the end of the show. Equities are leaning towards the red, but still ahead from COP29 here in Baku. We have plenty of interviews coming up. I'll be speaking to the OECD Secretary General Matthias Cormann and the World Bank's Ajay Banga and Dr. Ngozi Okonjo-Iweala, the Director General of the WTO. That's it for our show, though.